The news day continues here on One News Now. I'm Danny Laurel. The national government ended 2022 with a 13.42 trillion peso debt pile. This outstanding debt was more than 14% higher than the 11.7 trillion peso figure recorded at the end of 2021. This brought the debt-to-GDP ratio to 60.9%. That's slightly higher than the 60.5% print recorded in the previous year. But on a month-to-month basis, the national debt decreased by 225 billion pesos from the record high 13.64 trillion pesos recorded at the end of November. The Treasury says this was in part due to the strength of the peso. The debt-to-GDP ratio also decreased from 63.7% logged in the third quarter. Meanwhile, PAGCOR expects full recovery in the gaming sector, quote, soon, as the regulator posted a record revenue in 2022. PAGCOR's revenue rose 66% to nearly 59 billion pesos last year, with gaming operations being the biggest contributor. Now, with this figure, PAGCOR says it is confident that it will surpass pre-pandemic earnings soon. Now, checking in on the markets 15 minutes into the trading day, you can see a bit of, back and forth here. We're below 7,000 levels, but if you take a look at the past 3 days, we did recover from a bit of a mid-week slump last week. We are up by 3% in the past 3 days, up by 6.15 points. That is just about 0.09% in the green. Now, let's take a look at our movers for this morning. You've got Ayala Corporation up by 1 7/10%. Followed by another conglomerate here. You've got JG Summit and another Ayala company, Ayala Land, up by 0.8%. Biggest loser at the moment is PLDT, followed by Monde Nissin. Now, I did want to take a peek at one specific sector here, and that is the property space. Let's see if I can pull that out for you guys, which is actually up by 0.6%. This on the back of Colliers having had a briefing yesterday where they did mention that they're seeing higher office vacancy rate in Manila this year. They did mention that the unoccupied office space in the Philippine capital may rise to 20.2% this year. That's compared to 18.8% in 2022. They did say, though, this is from the overhang in supply, despite the transactions there having gone up. They also did flag that the vacancy may continue to creep into 2024 and even stabilize by 2025 still. In contrast, though, they did mention that the vacancy rates in residential condominiums is forecast to drop 17% rather, from 17.6% from the year prior. Now, let's take a look as well at the casino space. This after, of course, the optimistic PAGCOR outlook for the year. You can see the past 3 days here for Bloomberry, that's up by 1 7/10%, and Leisure and Resorts World up by 0.7% to 2 pesos and 90 centavos. Now, let's pause for a quick break. We'll be back with more stories after that. Keep it here on One News. And you're still watching One News Now. I'm Danny Laurel. Now, from a big liquor multinational buying a homegrown rum company to consolidation in the local food space, M&A is hot in the Philippine setting. Here to chat more with us, we have Antoine Blanc, partner at Index Asia. Salut, Antoine. How are you?
I'm good, thank you. Thanks for inviting me.
Now, Antoine, very exciting times. It's just the start of the year, but we've already heard of several M&A deals involving different Philippine companies. Is this some new phenomenon that you are seeing happening right now or during pandemic? Or is this something that's been an ongoing trend? And are we riding the wave of a broader regional or global M&A market?
No, so I think it's nothing new. What we've seen is the market grew. I mean, the M&A market grew even during the pandemic. In 2022 we were 2 times where we were in 2019, and I think it's a factor of 2 things. First, I think a lot of companies are getting to a certain level of maturity locally, where they're comfortable doing acquisition. And 2, I think we're just getting more integrated with regional and global capital markets, and so we see more and more cross-border.
Okay, very interesting here that you mentioned that it doubled compared to pre-pandemic levels. Give us an idea here of the most interesting deals that brought about this figure in the past maybe 12 months or even a couple of years. And are there specific sectors that stand out for you?
Yes, sure. So we've seen 3 key trends in the M&A market in 2022. Number 1, we've seen a lot of infrastructure deals driven by the deregulation of the sector. And in particular, I'm thinking about deals in the telco industry. You know, we've seen a lot of telco tower deals where Smart and Globe have been selling batches of telco, and that has been like many deals worth $100, $200, $300 million. The second trend is technology. I think we're reaching a level of maturity where a lot of technology companies reach a certain size and start to be on the lookout for acquisition or be target for regional players. And the third thing, I think, is we're starting to see the rise of local brands that are, I think, attractive for global investors because they're not only recognized in the Philippines, but also they get international recognition.
What's the status now, Antoine, when it comes to foreign ownership? You mentioned telco, and you know there's a lot of interest, like you mentioned, in things like energy, the utility space, even infrastructure. But historically, there has always been issues when it comes to foreign investments here in the Philippines. Have the latest regulations been more foreign friendly?
Indeed. I think the last actually 3 administrations have been progressively deregulating sector by sector. I would say the only issue is that each sector takes time. When we look at the delay and the administrative cycle or the political cycle between the decision and the implementation, you generally have a couple of years. But we see most sectors being deregulated one by one and open to foreign investors.
Okay, do you see more investments, like foreign direct investments in local companies, or just real acquisitions when it comes to the companies, like we've seen in the past couple of even months?
I think we're seeing both. So I think the technology space, you would see a lot of investments rather than acquisition at this stage, because we're still in the growth phase. In the consumer sector and infrastructure sector, you would see definitely both.
Okay, let's talk about the exciting deals. So first, of course, Don Papa. I'm sure you've tried that rum as well. A very big market, even in France. But tell us, how big of a deal, pun intended, is this for a homegrown rum company to be acquired by the largest liquor company, Diageo?
Sure. So I think it's a landmark deal for 2 reasons. So the first reason is, I think, the size of the deal. It's a deal structured in 2 parts. So you have an upfront consideration of 260 million and deferred consideration, or what we call an earnout, which depend on the performance of the company in the coming years, of close to 170 million euros. So total, it's a $400+ million deal, and that's significant for the Philippines. The second reason why it's a landmark deal is, I think it's changing the perception that regional and global investors might have on Philippine brands. Because we've seen a lot of Philippine brands being successful on the maybe affordable segment, like Jollibee, but a Filipino brand being very successful on the premium segment in developed markets. That's new, and so I think this deal is changing the beliefs that investors might have about local brands.
Is there something, Antoine, about Philippine liquor that attracts foreign investors or even foreign consumption? Because we do have even a homegrown company, Emperador, that has markets all across the world. What is it with the liquor space?
So I think first, the Philippines is a significant country in terms of liquor. So, for instance, talking about rum, this is the third biggest country after the US and India. But I think what we see is in the liquor space, we see a lot of M&A, and the reason being all those big companies want to get a premium portfolio. That's called a premiumization strategy, because generally those premium brands sell better and better. I don't know if you remember what we've seen on the vodka or gin segment over the past years, with like premium brands being more and more successful. And I think when we look at, let's say, Diageo and Papa, they want to replicate the same story on the rum segment.
Okay, now let's move on to Monde Nissin acquiring Figaro. You know, it's an instant noodle company acquiring a cafe, sort of coffee business. Are there any synergies in this deal?
So, yeah, maybe first and foremost, I think it's a minority stake for now. And I think there are some synergies, in particular on the procurement side. But if you put things into perspective, it's a drop in the bucket for Monde Nissin, which is, big companies have done like $100 million acquisition before, like we scored. So for them, it's 800 million peso investment. So that's very little, and it's a way for them to learn about the F&B industry and let's say have a foot in the door to grow in this segment.
Are you seeing more of these types of transactions when it comes to the food segment or restaurant industry? We've seen a few, at least pre-pandemic, in terms of consolidation. What exactly is going on here? You've also got the likes of Jollibee, for example, and Max's.
I think you're right. There's some consolidation at play because I think there's two trends. First, the consumer wants like always better experience, and so the brand has to invest and reinvest in new concepts. And so the bigger you are, the easier it is for you to grow new concepts. And the second is, particularly in an inflationary context, you want to get like super solid like procurement and supply. And so the bigger you are, the better will be your deal with your supplier. And so there's a lot of value in consolidating and in moving from like independent chains to a group of chains.
Finally, Antoine, on the topic of MPIC, it's our biggest infrastructure, pure play infrastructure, going into the agribusiness. Carmen's Best, like you mentioned, maybe a drop in the bucket. They're looking at 500 million peso revenue in a year or so. That's nothing for MPIC, but they did mention they're looking into a bigger agriculture part of their company. What's the rationale here, and what are you seeing, especially with some rumors that there might be possible delisting as well?
Yes, so maybe let's start with the delisting. I think most brokers, most analysts agree on the fact that Metro Pacific stock prices might be undervalued.
Okay.
And the fact is they've been doing some buyback for quite a long time. So I think the reason why you would want to delist is basically to take advantage of a low price and basically create value, bringing this company private. And in this case, I think also there is a rumored a buyer is Japanese, and so there's a lot of capital in Japan with not a lot of growth opportunity, and for them it's attractive to basically get into a big player in the Philippines. When it comes to your question about the agribusiness, the Philippines used to be a strong agriculture business, and I think it has been lost over the past decades. And so we're in a situation where the whole value chain is a bit inefficient, and the perception of and the strategy of Metro Pacific is to improve this value chain, and because there's a belief that there's a lot of value to capture in what is today a very inefficient industry.
All right, exciting times for the mergers and acquisition space. Thank you for those great insights, Antoine Blanc of Index Asia.
Thank you for inviting me.
For more updates, visit News 5, the Philippine Star and Business World online, or visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com, and stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.